Hey guys, Joel Frank here, market analyst for YouTrading. In today's video, we're going to be giving a quick update as to what's been going on this week and what potentially could play out for the rest of the week. So I think let's just jump straight into the charts here. I mean, the major thing that's really happened so far this week is we've seen a bit of a sell-off in US equities. As I predicted, to be honest, guys, we had been in this trend channel, but when we broke above it broke below it, and below the 21-day moving average last week, or at the end of last week, I did think that a short-term pullback was in order. We have seen that. We've fallen back to 4,000. Why have we seen that? Well, I mean, first of all, this didn't help. Tuesday's US flash services PMI data, which was hotter than expected, particularly the services aspect, very much in fitting with the recent string of strong economic data reports we've had out of the US, including, the official jobs report, the ISM PMI data for January. This flash PMI data is actually for February, so hinting that the ISM data for February is also going to still be strong. Inflation was hotter than expected last week, and other data reports have also been strong. All of that means that markets are sort of coming around to the idea that the Fed is going to have to do multiple further interest rate hikes, which is what the Fed's been saying all along. But markets, for a lot of this rally earlier this year, this rally was sort of almost the markets in disbelief that the Fed was actually going to deliver as many rate hikes as they were saying they were going to deliver. But now we sort of seem to be coming back to reality, basically. We've tested we found support just above the 50-day moving average. And also some people talking about this trend line too, linking, the low from last year and then the low from earlier this year, or a low from earlier this year, which we seem to have found support at. But I mean, there's a lot of support basically in the 3,900 or 3,950. Well, no, let's say the low 3,900s to the 4,000 area that we're currently in. Got these moving averages, got that uptrend which I just drew up, got the downtrend from 2022. But I think we can probably find a bit of support here for a little while. But obviously we do have the Fed minutes coming up today. And if you remember back to the Fed meeting that we had earlier this month, it was on the 1st, and look at that, we had this rally and then we hit yearly highs a day later because markets basically interpreted Powell's remarks as dovish. But let's just look at what's happened in Fed interest rate pricing since then. Let's go on the CME Fed Watch tool. Yes, the initial reaction to that meeting was dovish, but since then we've had hawkish Fed speak. We've had a couple of Fed members talking about maybe a return to 50 basis point rate hikes. Everyone else talking about the continued need for further rate hikes, basically. So if you look at the pricing for the March meeting, we're now looking at a 21% chance of a 50 basis point rate hike. I don't think they're going to go back to 50 basis point rate hikes personally. But if you look a month ago, there was a 0% chance and a 20% chance that they weren't going to hike at all. So that's a big shift. May, pretty much expecting another 25 basis point rate hike to above 5%. June, pretty much expecting an interest rate hike to just under 5.5%. And even July, a lot of people starting to anticipate another rate hike to 5.5 to 5.75%. That's still a minority view. But that's another 100 basis points of rate hiking that's increasingly being priced in by the market. And, if you go back to a month ago, there was a 0% chance implied by markets of another 100 basis point in rate hikes. So yeah, pretty much we're seeing that shift in markets. That is obviously having an effect on bond markets as well. The 2-year yield hit fresh highs since last November at, how high did it get yesterday? Yeah, 4.738%. Pulling back a bit today, but continues to grind higher, and I think it could hit fresh highs, potentially approach 5%. The 10-year also moving higher, broke to its highest since also last December. Looks like it could go back above 4%, depending on how things go with the Fed minutes today, how hawkish they are. And then depending how things go with the core PCI data we have later this week. And then we've got the second estimate of US GDP as well. All things to be keeping an eye on. They could all affect Fed pricing, bond markets, US equity markets. Let's look at the Dixie. Dixie continues its sort of steady grind higher. I'm thinking that it's going to, now we've had the breakout of the bearish trend channel. I think we've had confirmation of a retest. I think we can head higher in the Dixie now to the upper 105s. Just a quick look at some of these other pairs. Yeah, it looks like the euro dollar's got a room to move lower under 105. It's at 106.40 right now. It's broken below 50 and 21-day moving averages. Sterling's holding up okay for now, but it does look like it might be performing a descending triangle, recently finding resistance at its 50 and 21-day moving average, just like euro dollar, but holding above its 200 and 100-day moving averages for now. This is an interesting one, sterling. It's getting like caught between support and resistance levels. I mean, this week we had much better than expected data out of the UK, flash PMIs, manufacturing much better than expected, services much better than expected. So, you know, we've also had recent labour market data in the UK that was hotter than expected. Inflation remains at highly elevated levels. So BOE, fears about BOE tightening might be enough to hold up sterling for now, but we're going to have to see. We're going to have to see what happens with Fed-related things this week, because if the dollar resumes its more sort of vicious rally that we saw in the last couple of weeks, we could be moving lower. But play things by ear here. In terms of other asset classes, quick look at oil. Still within recent ranges, currently struggling below the 50 and 21-day moving averages. When stocks fall, when the dollar's strong, that's generally bad for oil, which is seen as a risk asset and does have a negative correlation to the dollar. So that's keeping a lid on things for now. But then you got the China reopening and strong US data, which implies that maybe the US economy won't fall into recession. And, you know, that's good for the demand outlook. So maybe we can hold above this 72 level, which is the sort of kind of support area, or the 70 area. Let's just mark up this low, actually. But yeah, like I've been saying, I think it's still probably going to remain within this range unless there are big shifts, which we'll talk about if there are. Finally, gold. Finding some support at the moment above this 1820 to sort of 1825 area. But, you know, if yields and the US dollar continue gaining, then there's risk of a breakout lower towards the 200-day moving average around 1780. Anything else we haven't looked at? Maybe we should probably take a quick look at dollar yen. What's dollar yen doing? Flirting with this important resistance level. Could go higher, like I say, if yields and the dollar keep gaining. So yeah, main things to watch this week. Fed meeting minutes. US GDP. US core PCE price index. This will be interesting for dollar yen as well. The guy is expected, or the guy who will become the next BOJ governor, as people speculate as to whether the BOJ is going to back off from its ultra accommodative policy stance. And obviously there's a couple of things that have been happening this week if you're interested in the smaller G10 countries. Like we had the Aussie meeting minutes earlier this week. We had Canada inflation. We had the RBNZ raising interest rates by 50 basis points as expected. And then we got Governor Orr speaking on Wednesday. So there's plenty of things to be keeping an eye on. G20 meetings later this week as well. You know, there's a lot happening geopolitically, as always, but especially at the moment with the Ukraine war that's raging on. But yeah, guys, hope you enjoyed the video. Hope you all found it informative, and I will see you all in the next one.